You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here one final time for our regular broadcast week here. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are drawing strength in these crazy, troubled times. Remember, if you like what you hear and you're on the on-demand side, keep rating and reviewing. It really does help the new folks. And again, look at the markets. There's new people discovering this stuff all the time because they kind of have no choice. So let them find a path to the quality content. We like to think we provide that here. So if you agree, keep rating and reviewing. You could argue the new reviews and new ratings really help even more than the stuff we've had for decades in there. So keep rating and reviewing if you like what you hear. If you want to join the fun secret club there, if you don't want your broadcast week to end with volatility views, you want to get options oddities after that, you want to get pro Q&As earlier in the week, you want to get the giveaways live throughout the week, all that cool stuff to really engage with all of our shows, all of our hosts, all of our content, theoptionsinsider.com/secret club is the place to go to learn more. And of course, however you listen, if you're joining us in a secret club, if you're joining us after the fact on demand, keep sending in those questions, those comments, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from today. First, let's go back out to the MIAX hot seat. We are joined once again by Mr. Matt McFarland, the derivatives product and business development specialist over there, especially when it comes to futures over there at MIAX. Matt, welcome back to the show, sir. It has been too long.
Thanks, Mark. Yeah, it has been a while, and glad to be back. Should be an interesting show today. A lot going on in the markets.
Yeah, you picked a good one. You picked a day with some vol. A lot to talk about today. And also joining me to help me parse the madness, the maelstrom, the chaos that is the world of volatility right now. We had none other than the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program once again, sir. Another week where, dare I say it, do we have to bust out the logins again, sir?
I'm going to say yes. We're gonna end the week with vol still. I don't know. The market had, I guess, I don't know. Maybe the algos swung things up or from down from where they were, but I believe nothing in this Jello mold market.
I believe nothing, says the man. Yeah, I'll let you be my logins arbiter, and I do agree we are substantially elevated from last week, so we may have to have yet another appearance from our favorite and fabulous guest star, Mr. Kenny Loggins. Let's find out as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, some of all trading and trending and analysis and unusual activity, all sorts of fun perspectives. And man, what do we all say coming into the start of the new year, right? We thought, we've said this for the last couple of years now. I guess maybe we should learn, but we keep doing it. We keep allowing that optimism to creep into our souls. Every year we think, okay, especially since the start of the pandemic, we think, okay, new year, new stuff, pandemic's maybe going to start to recede a bit, we can start opening up, maybe life can get back to normal, and then something comes along to undercut us, usually very early in the year. Last year we had, of course, the insurrection and all the madness that followed in January, then the meme stock rampage kicked off and sent vol into another stratosphere, and this year, who had a madman in Eastern Europe just launching an invasion, and then all for the fun of it, also threatening the West with nuclear weapons, and then also, on top of that, if that wasn't enough, also shelling an active nuclear reactor with conventional weapons. And who had that on their bingo card? If you did, you're perhaps a more prescient person than I. Yeah, and probably the last thing the world needed when we're all trying to come to grips with this, hopefully soon to be post-COVID, or at least maybe living with COVID environment that we're perhaps heading toward. But nope, we have a madman shelling reactors over. In fact, it's so bad over there. I was talking to someone this morning who's based in Eastern Europe, actually in Germany, at a big vol fund there. And he was saying they're actually talking in the morning meeting about having to take radiation pills so they can keep coming to work. I mean, we forget here, we're kind of lucky in the U.S. that we have these great barriers of the oceans between us. And he was even saying that, when you move from the U.S. to Europe, you forget you no longer have those barriers. These people are quite literally on your doorstep. So it's a very different scenario the world is facing right now. And as a result of all of that, it's a long way around to saying vol a little bit higher right now as the markets were selling off. Even though the market sell-off, we have mitigated that quite a bit. Seems like the S&P sold off pretty hard this morning. Then it got a nice little bounce, a little bit shy of the 30. How low did it get? It's like about 42.89. So it did break the 4,300 level ever so briefly, coming into showtimes at about 43.34, almost 43.35. So it has rebounded a bit. Still off about 2/3%. The Dow off about 0.5%, and NASDAQ off a little over 1%, about 1.2%. That means vol is up from where it was this time last week, but not quite as lofty, not quite as elevated as it was even this morning. We saw levels much higher this morning than we do right now. Coming into the start of the show, we had spikes at about 32.5. That puts it up about 4 3/4 points from where it was this time last week. VIX cash was at about 33.25. When we kicked off the show, it puts it up about 6 1/4 points. And our old friend VVIX at about 128.5. That's up 9.5 points. And lest we forget, which we never do here on the show, we quote it every week, the Viking, a.k.a. V-Spikes, was at about a 154 when we kicked off the show. It's actually down a little bit from down about 7.5 points from where it was this time last week. Remember, I was on the show last week. Simon and Tom Jark, who've been on the show many times, have done an interesting video. You can check it out over there at the MIAXoptions.com/spikes site for how they think the Viking stacks up against VVIX. It's an interesting one. Check it out if you are intrigued by such things. Speaking of the Viking, let's go on out now to the MIAX hot seat. Matt, you haven't joined us in a while, so a lot to unpack. First, walk us through what's been lighting up your tape on this crazy, tumultuous week of volatility, sir.
Thanks, Mark. Yeah, what I've been focusing on from a vol perspective is the shape of the spikes futures term structure. term structure typically is upward sloping, or what we call contango, where the shorter dated futures trade at a lower price than the longer dated futures, and we kind of consider that a normal market conditions where the prospect for higher volatility is really further out in time rather than right in front of us. But when you get spikes in volatility, you get a shift in the shape of the term structure from upward sloping contango to downward sloping or backwardation. So we are in backwardation right now, and what's interesting is how long we've been in backwardation. We're working on our 12th consecutive session of backwardation. That's a long time. Typically, when you shift into backwardation, it's relatively short-lived because it usually attracts short sellers, but it's being quite sustained so far. 12th consecutive session, 18 out of 42 sessions in 2022 have been in backwardation. This is quite unusual, and it speaks to the immediacy of the volatility concerns of market participants, and it's something for people to be aware of as they're employing volatility strategies, particularly mean reverting volatility strategies.
Yes, that backwardation, you're right. Usually a fairly short-lived phenomenon. The fact that we're diving into our 12th session now, you're right, it does make things a little bit challenging, a little bit interesting. And let's see, speaking of interesting, I'm trying to get our co-star to join us. He's being a little bit, as you know, as these divos and big stars are, they're being a little bit difficult here. But I'll see if I can get him to join us, Mr. Rock Lobster, while you regale us with what is lighting up your tape in this day when I guess we can call it the Madman Volatility, Nuclear Volatility. What do you want to call it this week, sir?
There's no bigger star than me on vol views. So who possibly could you get that would, upend my,
we'll
my
have to wait and
presence
see.
on this show?
We'll have to wait and see if we can work it out with his agent. We shall see. So
okay,
keep talking.
Well,
we shall see.
I mean, if you got to work it out with his agent, that's because I don't have an agent, so clearly he's bigger than I am. I agree with that sentiment. We've got a lot of backwardation, or we have a extended backwardation. So my general thing I tell my students is that you do not know how long backwardation will last, even though a lot of the times it's really short-lived. You still don't know how long it lasts. It's also a market signal because all the front-end volatilities just go sky high and everybody's freaking out.
There's our guest star. Better late than never. There he is.
Oh, there we go.
He was being a little difficult today, but now he's better late than never. The star can't be early. He's got to come late, fashionably late. There you go. Now it's appropriate, Mr. Rock Lobster. Go for it.
The danger zone.
Now it's vol views again.
It is playing in the background. Well, you know what? When Kenny Loggins comes in with the danger zone, we all bow. We all bow to the volatility master. And what is the problem with this? I'm not going to say, okay, problem. It's just, besides just a horrible situation, which I don't think anybody, it's not horrible. I guess maybe for Putin, maybe he's happy, he's in his happy place, causing global mayhem. But just the kind of pull of vol and the continue, now at a 32, we're looking at 2% per day on average for SPX. So for traders, if you don't think you're going to get a move on a day like with the higher VIX, you are. I think the stranger thing about the last couple weeks is the lack of a close-to-close vol. So the difference between, the close the day before and the close of the following day has not been that big. It's in the 20s, like 22, 23, but normally when VIX is in the 30s, you get these crazy ranges, and you get kind of crazy close-to-close ranges. You've had a lot of, down 1.5%, and then back up to unchanged. Or we're ripping up in the morning, and then we're down by the end of the day. So I think when you have vol this high and you have the uncertainty, and the tails on the uncertainty are kind of crazy, to be honest. You got to be realistic here. It is not. I call them. I go. This is the no fun Green New Deal. I don't like it. I don't like any of it. I don't like the inflation. I don't like any of this stuff. And it makes it very difficult from a trading point of view. So, but as far as VIX goes and the curve, we're totally backwardated. The short-term vols are relatively high, but it also, and another thing I've noticed, it's not as steep a curve as I have seen in the past. Matt, maybe he can comment on this, in the spikes futures, but we don't have usually with vol in the 30s, it's kind of like a high end point for volatility. And we don't have that super steep curve where, the futures are down the 20s, right? So it's a relatively flat backward curve. So I think, at least from my sense, that just means this is the market. We don't know how long this craziness is going to last. And they're not really putting a shelf life on it. So there's some comfort out there buying volatility at relatively high levels, because I think the size of any kind of snapback could be relatively high. So I don't think there's a lot of penalty for liquidity providers to own volatility, even at this extremely high level, because the potential gamma is so massive in either direction. And I think that's why the curve looks like that. If I was trading in the SPX, that's how I'd be pricing it. So, so you have, I think, an odd-shaped curve, but it's a curve. I've seen a couple of wars as trader after 30 years, and we didn't have VIX in the other ones. It wasn't around yet, I believe, and at the Afghanistan war, I don't believe it was there, but I could be dumb, but I don't remember being able to trade it in 2003. I think it didn't come until a little after that. But I'm not 100% sure. I'm sure I didn't trade it. So anyway, so again, seeing a couple of Gulf wars and all that kind of stuff, the activity level for equities is not a surprise. How they're trading and the illiquidity of them. So anyway, I think that's what we have. I don't think it's going to go away until there's a ceasefire. So if you like the market action you have right now, the longer it drags on, vol will stay high because the potential move is still so great. And we ain't going to get it ended till somebody leaves. Or there's a ceasefire. So it could go on for months, or it could end this weekend, which would be obviously end in a good way this weekend. Would be the best for everybody involved. So that's how I see it, and I ain't changing my mind as of right now.
That'd be impressive if they could bring all this to a conclusion. Go from shelling nuclear reactors to ceasing hostilities over That'd be impressive.
It will, but it's 2022.
Yes, you're right.
Anything can happen.
Literally anything can happen at this point.
2020s. Global pandemic, nuclear, hey, let's just pick it. You can't count anything out, man, in this decade.
It's not enough that we actually have nuclear weapons that we're threatening you with. Now we're going to actually let's just shell a reactor. Let's just show them we're crazy.
Yeah,
what's the worst that could happen? We shell the largest nuclear plant.
Was good.
Exactly.
Hit the target area, not the other one.
Exactly. Jeez, it's not like there's a history of nuclear meltdowns in Ukraine or anything.
Or yes, or in Chernobyl for that matter.
Exactly. Right down the street from where they're. Let's just see if we can do that again. Why not? Why not? That was good for society last time. Good times. Good time. The 2020s, listeners, the gifts that keep on giving. But you know what? All this vol usually leads to a decent pop in volume. Surprisingly enough, as I talked about yesterday on the option block, we do have the numbers now from OCC for February. And this February is actually the first kind of year-over-year down month. Not much, I think about 2.3%. One of the first year-over-year down months we've seen since the start of the pandemic, which is kind of interesting. Now, Matt, you mentioned earlier in the show all this backwardation that's obviously driving a lot of interest in the futures over there, which is your bailiwick, but also you guys have been doing a lot of developments also as well in terms of incentives to get things cooking on the futures front. So walk us through a little bit. How was February over there at MIAX from your perspective, sir?
It was a really good February, Mark. The MIAX Exchange Group operates 3 U.S. equity options exchanges, one equity exchange and our futures exchange, MJEX. So our share of multi-list options in February, we just reported this yesterday, was at 14.2%. So amongst those 3 U.S. equity options exchanges that we operate. 3 out of a total of 16 in the U.S. And that's higher than we were February 2021 by about 85 basis points. So that business is continuing to grow. Our equities exchanges market share is up to 92 basis points, and MGEX, our futures exchange, had its best February in the history of the 140-year exchange, with trading volume at over 300,000 contracts for the month. So all of our various venues performing fantastically in February.
Glad to hear someone was putting up some numbers. As our resident exchange representative here, I'm curious, Matt, what are your thoughts on those overall OCC numbers I was talking about, too? A little bit of a hiccup, a little bit of a blip off, like I said, not much off 2.3%, but still one of the first times we've seen a down month in a while. Everyone's been talking for a while, speculating, can we keep this inertia of volume, this tsunami of volume, can we keep it up in the world of options? What are your thoughts? You think February is just a little bit of a break? It could also be February is a short month. There could have been some weirdness with the trading days. I'll have to go look and see. But what are your thoughts on February, and if it has any broader implications for the options market, sir?
Yeah, there's been so much growth, since the pandemic. Volumes have been so strong that a minor pullback February year over year, from my perspective, not too concerning, especially with the amount of volatility that we're experiencing so far in March and the prospect for more volatility going forward. I think it's just a minor blip, a minor pullback. I think that the growth is just going to continue, and our industry will continue to demonstrate the value of these products and the value of incorporating options and derivatives into portfolios, and particularly the risk mitigating aspects of those of our products, and the importance of that risk mitigation into an overall portfolio as this volatility persists.
If someone shelling nuclear reactors doesn't teach you the importance of risk mitigation, listeners, I don't know what will. We've said it before, we'll say it again. We have quite literal weekend risk these days, so bear that in mind as you're putting on your stuff heading into the weekends and throughout the week as well. Let's head on out. We were talking about the futures earlier, how they are in this extensive period of backwardation. Mr. Rocklobster called it more of a flat backwardation now, but still a backwardation period that's longer than we typically see it lasting. Mr. Rocklobster, what are your thoughts here on this persistent state of backwardation? As we kicked off the show, the March futures looking frothy again. They're up about 5.5 points. They've come in a little bit since then. The April futures up about 4.5 points from where it was this time last week. So that front portion of the curve still frothy, sir. What's catching your eye out there?
Frothy, and also it changes I know we haven't gotten to the the vol ETPs, but what is the path of those products? Like so normally VXX, the predictably crappy product that we all know and love, and UVXY, the backwardation is grinding those higher now. So the polarity has changed. So for the last 10 days, if you look at a chart of VXX, you're like, wait a minute, this isn't the product that I know, because it's kind of been meandering higher. Also, kind of the state of vol for listeners is things tend to move slower. Even though the futures are moving higher, like as on a percentage basis, things are just not as fast. So VXX is going up, but unless we have a real blowout, and I'm saying futures into the high 30s, low 40s, like something like that, where you really have a kind of a jump. I did a simulation today. If the VIX futures are up $3 or $4, I think VXX is only up like $2, something like that. So you don't have the vol products can move, but now because of where things are, they don't move as much. So like call spreads and stuff like that in the vol products, I think the prices are pretty good relative to the kind of gains that you can make. And then conversely, like stuff like SVXY, which I think is the only inverse product left, it's slowly kind of getting smashed. So until the term structure changes, the the path of those products aren't going to change. So SVXY, which is usually pretty predictably moving upward, is now moving downward. And when does it change? Like I said, I think those are the, nothing's changing until we have the news changes. So I tend to trade in vol events. And COVID is, I would say, the 2-year event, but as it definitely is going away, but it has left a lot of scars, like, big debt and, and you still have random mandates and stuff. There's a lot of stuff that hurts productivity in the U.S. from it. So it's mostly gone, but it's not totally gone. Then, of course, the second part is the Fed changing their regime. That's another what I would call mini event. But once they telegraph everything, the vol tends to go down from it because we know what it is. It looks like I think that was a big vol relief and market relief in the middle of the week when Powell said we're just doing the 25 basis points and maybe, who knows exactly what after them, but it certainly is not the 7 interest rate hikes that we probably should be having at this time, to be honest. Even though it's some short-term pain, I think at some point we got to just eat the short-term pain. And then you have this whole Ukraine thing, which is just, it's just an event with massive tails on it. It's just what it is.
I think shelling a nuclear reactor is like the definition of a tail event, is it not?
I believe so. And just thankfully, I have students all over the world, right? Russian ones, Italian ones, here, what the heck is going on? So, and that's what we have. So when I'm saying what the heck is going on after watching the markets for 30 years, you know we're in the danger zone. So it is even though I'm in my little rock on the corner of the universe, which as we have said on the show, I was looking prescient many years ago, and people used to mock me.
Technically, you are much closer to Putin than me, so he's going to get you first before he gets me. So I'm pretty safe. You let me know if you see those storm clouds coming your way, and I'll duck and cover here.
Exactly. But that's as far as the curve shape goes, that's what we have, and it will be persistent. And I don't think it's going to go away until you have the ceasefire. Just because the fact that there might be a change, right, and the resultant just parabolic spike up, like this vol is going to kind of hold at these levels, and it's going to produce some really funky decay patterns. So that's what we have. It's a very difficult trading environment. If you haven't noticed, it's an illiquid trading environment relative to normal. Trying to get some things done. So personally, almost everything I'm doing is just like a regular old vanilla spread. You have to kind of keep your what you want as a trade to be relative to the environment that you have, right? And vol is super high, so you're paying out the nose for anything anyway. And decay by the time something happens could totally erode the trade, so spreads actually save you a little something. This is what we got. So I hope it gets better. I would like it to get better, but as a trader, hope is my least favorite word there is. So there you go. There's the grumpy old man take on.
You're not drinking the hopium out there today, sir?
No, it's actually you smoke the hopium.
Oh, I'm sorry. You have different forms of the hopium there. In my era, we only drank it. We weren't smoking it like you crazy dinosaurs. That's why you have all the issues you have now. So there we go. That's how I'm just going to put it out there.
You got the answer.
All right. Let's keep on rolling out to the land of all things spikes. I know, Mr. Matt, we had first off, if you have anything you want to add on the spikes futures front, I know you've been working pretty diligently to incentivize a lot more volume, tighten things up out there, get more flow going on the futures, which, of course, translates right into the options, which is where we live and breathe here. And then speaking of the options, we had that big four-way go up recently out there. And spikes, you haven't joined us in a little bit, so if you have any color you want to add on that as well, have at it, sir. A twofer for you.
Thanks, Mark. Yeah, the on the futures front, I think what's important to note about Spike's futures is that despite this higher volatility, the market quality that we're seeing on Spike's futures is still very strong. So typically when you get higher volatility, the market quality, you'll see some market quality deterioration. Sometimes you see some significant market quality deterioration as the market making community just kind of gets in a risk-off mode. And the way we measure market quality on Spikes futures is we compare it to VIX futures, quite frankly, and we compare what percentage of the time are we actually matching the VIX futures bid-ask spread width. Now, the bid-ask spread width is typically just one tick wide, which is 5 cents on both Spikes and VIX. And, the percentage of time that we are matching that bid-ask spread width under normal market conditions is in the 75%, 80% range, which is fantastic for a new derivative product. We've seen that come off slightly in this higher vol environment, but not much at all. So I think that's pretty impressive in that we've been able to demonstrate really, really strong market quality despite higher volatility. And it's an indication to the market that they can rely upon this liquidity in both quiet market conditions and highly volatile market conditions. And that strong futures liquidity really, lends itself to strong options market liquidity, because an options market is only as liquid as the underlying. And, we saw a decent sized Spikes options trade on February 24th. It was a four-way where the customer was a buyer of the March 30-40 call spread versus selling the March 22-26 put spread. It traded 500 times for a net debit of 27 cents. Has a max gain of 973 at expiration, a max loss of 4.27 at expiration. And I think importantly, we would assess this fill of paying 27 cents for the package as a good fill. And when I say a good fill, I mean when we look at the markets on the individual legs of those four options, of those four Spikes options, and compare them to the markets of the individual legs on the VIX options, we would assess this as a price at which a customer would obtain a similar price on a VIX option strategy to the Spikes option strategy. And not only that, they receive essentially the same execution price, but the exchange fees that are paid significantly different. Customer paid 0 exchange fees for these Spikes options. If the same trade would have been put on in VIX options, the exchange fees would have totaled about $610 or about 30 cents a contract. So same exposure, or essentially the same exposure, very, very, very similar exposure, much, much, much less exchange fees. So we're proud of that development.
Yeah, it's interesting, too. I'm glad you confirmed, because I kind of assumed he was leaning to the upside with that four-way, but I'm glad you could confirm it, which also makes it interesting, Matt, that he hasn't taken any of it off yet. You could argue he's gotten a few pops during that time since he's putting it on, right? And yet he's still sitting on it, which I guess someone's shelling a nuclear reactor. Who can argue maybe there isn't more upside ahead, right? But, Matt, is it interesting to you that he hasn't pared any of this back yet?
Yeah, it will be interesting to see. And I think another, interesting thing to note for your listeners is this March expiration. It comes a little bit early this month. It will be on a Tuesday instead of a Wednesday. So we typically settle Spikes and VIX on a Wednesday because you work backwards from the SPX or the SPY expiration, which typically is a Friday. You work 30 days backward because we're talking about 30-day implied. That typically falls on a Wednesday. It falls on a Tuesday this month because Good Friday is April 15th. So SPY options, SPX options, standard third Friday are expiring on a Thursday. And that's why we have expiration on a Tuesday this month. So it'll be March 15th to see if this particular trade that we're talking about will be in the money. That'll be on March 15th to determine this month.
Yeah, we'll see. Yeah, usually a trade like this, you get your pop well into the 30 handles, maybe you think about taking it off, or at least taking some of it off. In this case, nope. Either he's looking for more, he's got something else against it that he doesn't want to unwind this part of the trade. Either way, he's still sitting on it, which is kind of interesting. What about you folks, listeners? If you had that 30-40 vertical out there in spikes right now, would you be starting to take it off? Would you have started to take it off already? Would you be waiting for more? Hit us up, let us know. Let's get on out now to the land of VIX options. A little bit of red on the screen, that means VIX is going to be putting up some numbers, and that is the case today. 430,000 contracts on the tape as of this point in the show right now. That's pretty decent, especially given the fact that the ADV has continued to trickle down, or actually not really trickle, dramatically erode. It's down another 44,000 contracts to 599,000 contracts right now, so back below the 600K level. Day like today, a few more of these might tick back up a little bit again, but right now still shy of the 600K level. Let's get out to the top 10. Now, you might think, given what's going on, what's been afoot over the last day or two, you might think a lot more calls lighting up the tape in the top 10 right now than puts, but actually is not the case. In fact, the number of calls open, it was 60-40 puts over calls last week. That has actually decreased this week. It is now down to 70-30, so 7 of the top 10 positions in VIX options right now are on the put side. Only cost you 116,000 contracts to break into the top 10 right now in VIX land. That is not a ton of paper if you know anything about VIX. That gets you to the March 23 puts. Number 9, 119,000 of the April 20 puts. Number 8, we got a little bit of call love here, and you know what strikes are open right now. That's the best part. There's no 30s here. There's no 25s. There's no 22s. There's nothing like that. It's all 70 and above calls that are open. Sometimes you have to just love the world of volatility trading, listeners. 119,000 for number 8 of the March 70s, followed hot on its heels, number 7, 129,000 of the June 70s, because why not? These are also still open, which also raises the question of, what are you doing out there? If you got these things, you getting these pops, and you're not even taking some of this off. Interesting. What else do you have on against it? Number 6, 131,000 of the June 19 puts. Number 5, $1.35 of the June 16 puts. Number 4, 147,000 of the March 20 puts. Number 3, 148,000 of the March 22 puts. Number 2, $1.49 of the June 18 puts. And rounding out the top 10 yet again, 150,000 almost exactly. So the number one size position in VIX yet again this week, listeners. I use size in air quotes. $1.50 isn't that much for VIX, but it's the October 75 calls. That is the most sizable position open in VIX right now, and they haven't touched it, which is kind of interesting. So a lot afoot. Given what we're seeing in spikes options and maybe VIX options, maybe some folks are preparing and or waiting or worrying about additional upside legs here in the vol front. Again, none of these positions have been pared down, which is a little bit interesting. Of course, they could be like our buddy 50 Cent there. He kind of waited until the exact extreme moment and took it off for pretty much enough to buy his own private island out there. So they could be waiting for those moments as well. Let's go out to today's paper. I said 427,000 contracts on the tape in VIX land today. That gets us number 1 once again. Oh, maybe they actually, let me look. 100,000 of these have traded today. So maybe I spoke too soon. Maybe they are unwinding these. Let me pull it up really quickly, because the top trade today, listeners, is 100,000 of the October 75 calls. Are they selling these things, or are they... I need to dig in this a little bit more. They're printing big blocks of it. 35,000 for 90 cents. That one looks like they're 29,000 for 75 cents. Let me see if I can find the earliest prints of these is usually indicative of kind of what they were up to. That's, of course, exactly mid-market, because why wouldn't it be? So, yeah, 100,000 of these OX 75. So there's a chance they have been unwinding these today's list. I need to look back a little bit, which, if that's the case, then dial back what I just said a little bit earlier. I'm actually happy to see that if that is the case, because that makes a little bit more sense than everyone just sitting on all these upside trades forever and doing nothing with them like we were complaining about last week. Number 2, a distant number 2, 24,000 of the May 27s. There we go. There's an actually relevant call strike I can get behind. Number 3, 20,000 of the OC 35s. That looks like the 1x5. It was in the 35-75 when those are strikes. So either way, that's 1x5. So it could be unwinding this whole thing. Number 4, we got the March 70s, about almost 19,000 of those. Number 5, about 15,000 of the March 30s. Number 2, we've got, or I should say yesterday, Thursday, Thursday, we've got 442,000 contracts on the tape. And the big dog yesterday was the June 35. So, again, some more somewhat relevant strikes out there. 30,000 of those. Number 2, 18,000 of the March 40s. Number 3, 16, almost 17,000 of the April 22 puts. Number 4, 15,000 of the June 30 calls. And also 15,000 of the June 65. So maybe bit of a funky vertical there. The numbers are exactly the same, which is usually not a coincidence. Wednesday, 486,000. So right now it is, actually I take it back, Tuesday we had more paper. So Wednesday is the number 2 day of the week, 486,000 contracts on the tape. The big dog on Wednesday, April 30s, 34,000 of those, followed by 25,000 for number 2 of the March 25 puts. Number 3, 24,000 of the April 42 half calls. Number 4, 24,000 of the May 27 calls, and rounding out the top 5 today, listeners, 15,000 of the May 32 halves. So you're getting some call strips and call trades starting to light things up, which, again, you think that would be reflected a little bit more in the OI in the top 10, but not yet. Tuesday, the big dog for the week, 725,000 contracts on the tape. The big dog on Tuesday, 63,500 of the March 22 puts, followed by 60,000 of the March 24 puts, so maybe a bit of a put vertical there or roll. Number 3, 42,000 of the April 30s. Number 4, 29,000 of the March 30s. Number 5, we have 29,000 as well of the April 28 calls. On Monday, we were back open again on Monday, so no truncated holiday week this week. We had 419,000 contracts on the tape. The big dog for Monday, 43,000 of the March 23 puts, followed by number 2, back to the 70s, the March 70s, 24,000 of those. Number 3, April 28 calls with 22,000 of those. Number 4, 45, the April 45 calls, 15,000 of those. And rounding out the top 5 on Monday, 15,000 as well of the March 30s. So a lot of interesting paper, a little bit more on the call side than you might reasonably intuit. That's kind of what I was expecting. When I looked at the top OI numbers, I was a little bit surprised, but the volume numbers throughout the week reassured me a little bit about what's actually been going up out there. Mr. Rock Lobster, A, anything catch your eye out there this week in VIX options? And B, have you had a chance to confirm that they are indeed closing out those OX 75s at 1x5, sir? Is he finally taking it off?
It didn't look like it the way I saw it priced, because I see a little wiggle and vol up, and the 35s look like they're hitting the bid, and the 90s, 75s are trading a little closer to the offer.
Yeah, I kind of assumed they were maybe putting more on too, and I was hoping I was wrong.
Right.
I took a quick glance. I said, "Is he opening more of this?" That's why I was hoping you would tell me something else, but apparently not.
I know you're like. I remember my least favorite 4-letter word trading is hope. Right? I hope he's getting it. So, I don't know. Is this Henry Kissinger? I mean, you got to have some kind of, 3D glasses to get
Henry
around
Kissinger.
Well, like,
now you're going back, sir.
He's like the political.
Is he about to bomb Vietnam? What's going on? Why is he showing up on the radar today?
Well, because he's been in my Twitter feed. People are like quoting him on this Russian-Ukraine policy thing. But anyway, this is up again. This is another it's a long Vega trade in October, just weird, but it's not like those calls go anywhere tomorrow. So the one thing about long-term options is they tend to stick around. They just don't go away.
Yeah, so I was hoping I was wrong. I was hoping that my cursory glance was incorrect, that they weren't putting more on, but that appears to be the case, listeners. They're doubling down. They said, hey, this nuclear reactor thing, maybe we're on the right tip. Let's do more. So, yeah, no unwinding yet, listeners. So everything I said before that I tried to walk back, put it back on double, because they have not unwound any of this nonsense yet. which maybe you can agree with that. Maybe that's a bad sign for all of us to come to the future, if they're still holding on to that 1x5 on the 75 strike, but it appears that is the case, listeners. We're still going to be seeing that in practice. We're going to be seeing a lot more of it on the tape, on the show next week. Let's go out to VXX, listeners. As I said at the start of the show, it was at about a 26.75. It's still at about 26.75 right now. It puts it up about 3 3/4 points from where it was this time last week. Today we're seeing some paper, 409,000 contracts. So VXX, no slouch. It is keeping blow for blow with VIX today. The ADV, though, has ticked down a little bit. 362 is down only about 5,000. It's not down the close to 50,000 that VIX was this week. So that ADV is remaining firm as the VIX one continues to erode. Top positions, if you're wondering, listeners, it is entirely puts, which is interesting, and it kind of gets back to the fact of what we were saying earlier. We were kind of in some heavy erosion mode earlier this week until Mr. Putin decided to shell some reactors. So you can maybe see why a lot of these puts were lighting it up. We're kind of coming up against it. Let's just do a top 5 here in UVXY. Let's go. Number 5, 40,000 of the April 16 half puts. Number 4, 40,000 as well of the March 19 half puts. Number 3, 42,000 of the March 18 puts. Number 2, 50K of the March 16 puts. That's actually on the weeklies expiring on the 25th. And rounding out the top 5 here, 55,000 of the traditional monthly March 17 puts. It's like Mr. Loggins decided to take a break. There we go. All right, let's go out here to the top most active contracts today in VXX. We've got 21,000 of the March 15 puts. Number 2, 20,000 of the April 18 half puts. Number 3, 18,000 of the March expiring today, the 4th, 27 calls. Interesting. So right at the strike, pretty much. I guess maybe they decided to get the heck out of Dodge before, while they had a good chance to do so. Those 27s weren't looking that good yesterday, so more power to them if that is the case. Number 3, 15,000 of the, number 4, 15,000 of the April 50s, 5 O's. Interesting. And number 5, 15,000 of the April 20 puts. Mr. Rocklobster, anything catching your eye in the land of VXX today, sir?
I did see something that was kind of interesting. And I posted it for oddities later, but somebody looks like they put on a risk reversal where they sold the April 50s. And by the way, for VXX to get to 50 by April, some really funky stuff has to happen. And they took all their proceeds and they bought a gajillion of the downside VXX puts, a gajillion of the April 08 19 puts and 18.5 puts. So I thought as a trade today, there is your counter trade. So maybe the guy that's buying the October is using that as a downside.
That's the other side he has on right there. Wow.
So that's the other side of that trade.
Interesting stuff afoot here. We got to keep on rolling into the other product you guys love to see go down. Usually not down so much today. This is UVXY, listeners. All right, let's see. UVXY was at about a 20.5 when we kick things off out there. That puts it up about 4.3 points. It's actually giving up some of that. It's about 20.25 right now, so it's up about a little over 4 points from where it was this time last week. Still, that's up quite a bit. My UVXY fly was looking pretty good yesterday, and I just had that weird feeling, get that feeling in the back of your neck that, you know what, we got one more day. It's looking all right. It's not great, but it's looking decent. If I don't take it off now, who knows? It was flirting right around with my strike. I was on the 18 strike. And I thought, let's just get the heck out of Dodge here. So I did, and that was fortunate because Mr. Putin decided to conspire against all UVXY put holders today, which, again, that's the risk of this product, listeners. Any crazy thing happens on the last day of the cycle, and all of that good is for naught. So that's the danger with this product. So luckily I got fortunate on that. Sometimes it's good to be diligent and take things off. Like we said, I was feeling a little bit more Putin crazy coming, and sure enough, that's what we got. So looking right now, we've got, let's see, how are we looking here in the top 10? We've got 1, 2, 3, 4, 60-40 puts over calls. Quick top 5 in UVXY. Number 5, 13,000 of the June 20 puts. Number 4, about 14,000 of the March expiring today, 16 puts. Number 3, 15K of the March also expiring today, 17 puts. Number 2, 20,000 of the March 70s. Those strikes fascinate me. And number 1, 22,000 of the April 15 puts. Today's most active contracts, all pretty much expiring today. 10K of the 20 puts, followed by about 9,000 of the 19 puts, 7,600 of the 20 half calls, 7,600 as well of the 20 calls, and 6,200 of the 21 calls, all expiring today. Mr. Rock Lobster, anything catching your eye in UVXY? Were you two working anything in UVXY this week before Mr. Putin decided to prompt you to take it off, sir?
Actually, I didn't have anything in UVXY this week because it's a hard trade for that product.
Yeah, it's hard backwardation. That's why I went fly versus anything else.
Like the upside flyer would. I mean, I could see even upside fly. I just don't. Like I said, I don't see vol coming down anytime soon, and that's normally when you want to try to grab that product. So if vol's still expanding, I just kind of mostly sit and watch it. So I like to say I was doing something, but I wasn't.
Let's see if we can sit and watch some of your questions. It is time for your volatility voicemail. And to bid adieu to Mr. Loggins, another great co-star throughout the show. Thank you, Mr. Loggins.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. Let's go out to our secret club folks, to Luigi, my boy Luigi. He wants to ask Mr. Lobster and Matt, he wants to ask you guys if with the advent of algo trading, if we could see a shift in traditional vol trading, kind of how the smile got wiped away with the crash of 87. So, Mr. Matt, you are invoked first here. I'll give you pride of place. Do you think algo trading could cause a shift in traditional vol trading, sir?
That's a good question. I think that there's a decent amount of algo trading going on in the vol space already. Probably room for more, to the extent that will change things to be determined. But I actually think there's a decent amount of that going on already. So a decent amount of that has been absorbed by the market. So I don't see a major shift there.
Mr. Rock Lobster, do you concur? You think most of that has already been absorbed in the market? Do you think algos are going to cause us to rethink how we trade vol, sir?
No, I think I agree. I think that's a lot of it's there. And what's the average hold time for like a Virtu or any one of those other guys? Aren't they only holding trades for like microseconds or something?
Half a second, yeah.
Yeah. So the problem with trading options is managing your inventory. So that problem has not gone away. So and that's why vol moves in the first place, because the liquidity provider gets inventory, as you well know, Mr. Longo, when you were crying walking off the floor watching all your options go out worthless. So that's part of the game. But I think it's the algo guys. They already here, and they are quite busy and active.
I was never crying when I was leaving the floor. Just maybe some manly sobs, but never crying outright, sir. You can't let them see weakness. Sometimes I am crying, though, when we get to the crystal ball. So let's see if that is the case this week.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, let's get to it. The most difficult, dare I say it, the most dangerous part of the show. And, man, we were kind of all over the map this week. Dang it, options queen. Freaking bullseye almost again. You just won last week, options queen. You're going to bankrupt me all my freaking prizes here. She was at a 33. Look, she did cheat, though. She did guess on Monday's option block rather than she waited a few days. So maybe that's the trick. See what happens over the weekend first. Then do your. As for the actual hosts on the show, I was at a 26 quarter, so I was feeling a decent amount of vol staying up, but not quite, obviously, as lofty. I was not factoring in the nuclear shelling for the last day of the week there, which threw all prognostication into a lurch there. Andrew was feeling a lot less vol at 24 and a quarter. Right now, Spikes is at almost a 33, 32.89. We've got VIX holding out right around the 33 level, 33.13 or so right now. So technically, options queen, you are outside of your 32.80, 32.90. So you're about 0.11 away on Spikes and 0.13 away on VIX. So you're technically outside our margin of victory, but I'll have to see with our producer. We'll see. If they haven't already shipped out your one from last week, maybe we can add something to it, because you're crushing it too much. You're gonna take all the prizes. But you know what? You're doing pretty good, so we should continue to reward that. Who else do we have here? 35s, 30.3, 36s, 30s. Those seem like the most relevant ones here. Everyone else was kind of where the Rock Lobster and I were. So on the show, at least, no joy for this time this week. That means, Mr. Matt, if you would like to play, you get pride of place, sir. What are you feeling for volatility this time next week, sir?
Volatility this time next week, I think, and I hope, Andrew's favorite word, hope, is that we're going to get some good news out of Europe. We'll get some greater certainty in the market, some calmness in the markets. I'm going to call for a lower spikes level, 24.75.
That tells you where we are. That seems so low now. Doesn't that tell you where we are from a vol? Oh, 24.75. That's nothing. That's no vol. But yes, let's hope. Let's hope you are correct for indeed the worlds. All right, Mr. Rock Lobster, I guess I was closer, so I shall go next. I'll give you pride of place. I'll let you go last. How nice am I here? So Matt's at about 24.75. We're at about a 33 in spikes and pretty much 33 in VIX as well. Yeah. And the guy's shelling a nuclear reactor, so pretty much all bets are off at this point in terms of expecting rational, sane behavior out there. So, again, these are hard levels to sustain, but I'm still feeling a fair amount of juice on the old Vine this time next week. I'm going to say, I don't know if I say a 30. Maybe I might feel a 30 handle. You know what? I'm going to do it. I'm going to say 30. 33. That's it. I'm gonna take that leap. I'm gonna be bold. Go where most men fear to tread, really. 30-33 for this time next week. Mr. Rock Lobster, what you got? Can you possibly match that audacity, sir?
I actually know this is gonna. And normally I don't do this, but I have to say I think we're gonna go. I think vol will be higher. I want, again, another 4-letter word that I don't like trading is want. Need, want, hope. Need, want, wish, and hope. Very bad words. But yeah, I'm gonna go. I'll tell you what. I will tick. I'm looking at the spikes right now, and I'm gonna tick higher. I'm gonna go 3340.
Wow, playing the Russell Rhodes role from back in the day. 33-4. I thought I was high, but you're coming in, sir. Wow. So there we go, Matt. Got almost a 10-point wide market this week.
we could drive a truck through.
If we gave that to a broker, he would not be happy with those results. So there's your market for this week, listeners. 24.75 on the dark side for Matt. I thought I was feeling bold. I thought I was feeling ambitious. 30-33. And the Rock Lobster said, hold my bear. 33-40. To the upside, I see some of our prognostications starting to come in. Options Queen, she's saying 30 again. You know, she's been kind of scarily precise. Maybe she's got some insight into what's going on in Eastern Europe. We got Luigi, looks like at about 28.75, so he's kind of splitting the difference between me and Matt. What do you guys feel? Hit us up. Let us know. You can win fabulous prizes. Maybe you're back to Options Queen and you'll win every week. Who knows? But cleaning out my storage area. But you know what? We're happy to do it for you folks. All right. That music means we are done for our traditional broadcast week. If you want more in your ear holes, though, you say, I don't want my week to be done. I want more content. All you got to do is join us in the secret club. We'll be back in a little less than an hour now. I got to get working on that next show for Options Oddities, breaking down all the weird, crazy, unusual trades. Spoiler alert, Mr. Rock Lobster has my EDU Odyssey, the long, epic adventure that is EDU. Has it come to an end? We shall find out. A little bit of a teaser for Options Oddities later today. You want to learn more, you want to join on all that fun, and check out all the episodes you've missed, all the pro Q&As that you've missed. TheOptionsInsider.com/secret club. That'll get you access not just to the live, but to our exclusive pro podcast feed that gets you all those shows. So you haven't missed out on anything if you sign up now. You go check it out. You get all that good stuff, and you get to play along with all the new ones, which is always fun. But for the rest of you, that does conclude your broadcast week out there. I want to thank you all for listening. And of course, so let's go out now first. Mr. Matt, if folks are intrigued, they want to learn more about the Viking or about spikes or about anything going on in the world of all things spikes and MIAX, where should they go? What should they do?
The place to go is MIAXoptions.com/spikes. Tons and tons of information for you there. Or feel free to reach out to me directly. MCFARLAND at miami-holdings.com.
There you go. Reach out to the man personally. And I've said it before. I'll say it again. That MIAXoptions.com/spikes. You could do worse than going to that page. You get all the historical data. You get the releases. You get the settlement data. You get links now, not just to Shift Search, but also to Quick Strike. Our buddy Mr. Nick over there does all the CME stuff working with MIAX as well, so you can get quick strike analytics for more equity stuff. How cool is that? Quick skew, all that good stuff. And if that's not enough, you get a link to a cool show called Volatility Views. What more could you possibly ask for from a vol-oriented destination? MIAXoptions.com/spikes is the place to go. And Mr. Rock Lobster, where should they go if they want to give you a hard time about your lack of hopium, sir?
It's not that I lack hopium. It's just you have to be careful when you smoke it. That's the key. That's the difference. You go to optionpit.com, memberships, or, like I say all the time, 888-TRADE-01. You call Ted, and if you listen to this show, you say, Ted, I listened to this show. I really liked it. Andrew is great. Actually, you don't have to say that. But you'll get 10% off any Option Pit product if you said you were listening to this show when you call. I don't know where you get something for nothing, but that's as close as you can get this week.
The key is you have to say Andrew is great. That's the key part. If you don't say that,
I believe that is the
there is no deal. Also, you have to say he's very handsome and surprisingly intelligent. All those things will get you great deals over there. Learn for yourself. Flattery will get you everywhere at optionpit.com. We got to get on out of here. For all of you on the on-demand side, have a great weekend. Stay safe out there, and we'll see you back next week. Another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.